before the seed round, before the press, and before there is even a product. There is that moment of pure conviction for investors. When someone wires money into a risky idea with no revenue, no traction, and maybe not even a name. So what does it really take to invest when there is nothing? And who are the people that are willing to do it? In this episode, I'm collaborating with Skander at Climate Drift, and we've put together an amazing event with 3 early-stage investors. It is packed with insight about first check in climate, so I hope you enjoy this new episode.
So today we're collaborating to ask really important questions, which is, where does the money come from? So who writes the first check in climate? What convinces them to move? We want to get a state of play. And I think we've got the perfect people on the call to answer that.
Indeed, I think we've assembled 3 investors who actually write the first check before traction, before product, sometimes before there's a name for the startups. We have Hampus from Pay Blue Dot. He's done 2 funds, over 180 million, 50 investment in climate, ex-founder who sold these startups to BlackBerry. We've got Andreas from Prototype Capital, a solo GP, builder at Product Hunt and AngelList before. Invest 100K to 200K into hard and real tech fresh out of the lab usually. And then we've got Jonny from Marble, a venture studio in Paris, on a mission to spin up 25 climate companies in 5 years by pairing scientists and operators with day zero capital. I think we have the most brutally honest group of investors that we know. So I think this is going to be an exciting discussion. And Skander, over to you.
Perfect. Hampus, we're going to start straight away with you. Back dozens of climate startups. What are you looking forward in a company, in a team currently?
I think for me, it's very simple. It's the fact that I think in general, I try to do stuff that I can't stop myself from doing. And that's a very honest thing. I think we just declined a company today, and we were actually spent 10 days on thinking about it, which is very long for Pale. And the reason we did was the company had really good traction. And I just didn't feel any energy for what they did. And the reason I was so tricked and it took 10 days to think about it and not 3 was the fact that I had really good traction. So I think that a lot of companies would say, oh, you need really good traction, whatever. I think that might be true, but I think that the thing is that you really need to get the VCs, the right VCs, to feel I really want to do this. And that is for me a combo of that I get excited about the problem and I really want to work with the team. So I think one of the more common questions for me, they're like a checklist of stuff you can ask, but I think those are the main 2 things. And it's not traction.
It's interesting because the first time that we hear energy over traction, and we will dive into the traction topic in a second. Andreas, little starting question for you. Solo GP, normally you move in hours, perhaps even minutes, not weeks. What's the fastest yes you've ever given?
I actually have a policy of never committing in the call, explicitly, because I would have had otherwise a tendency to directly in the call to say, yes, I'm investing. So I had to introduce a policy where I'm like, I'm very interested. This is not a commitment. Let me think about this properly, but soft circle money for me, So I had negative time once. I received a friend of mine told me about something and I already knew I want to invest before I got the introduction. But I don't think this is crazy. This is just part of that game almost.
What triggered that? Was it the intro? Was it
I think it's very, very easy to find reasons not to invest in something. And usually what you want to do is you want to have a good understanding what the factors are that make you want to invest into something. And if multiple of those combine, you are already in a very good spot. And we can go through the list afterwards. But I think that's the main thing. You almost have to have a decision framework as an investor in your head. What would be a no-brainer deal? And if you see them, you need to move extremely fast because likely other people share good parts of a decision framework.
Hampus has a checklist. Andreas has a checklist. Jonny will also probably have a checklist, which is exactly my icebreaker question for you. You mostly ideate companies internally at Marble, right? So walk us a little bit through the funnel from, idea on whiteboard to actually company you're spinning off, especially with the focus what's on the checklist, because we want to benchmark the checklist with Hampus and Andreas.
Sure. Yes. I mean, we do build companies, which I guess puts us in a bit of a different category. That's true. I think, though, the key point to say is we start with problems. So we don't bring in someone to build a company we've already figured out. We start with the problem space and key things that we want that company to be able to achieve in many different potential ways. And I think one of the points that we look a lot for is what we think of as founder problem fit. So does that individual exhibit the technical but also personal characteristics that we would be excited about to potentially be a future founder of that type of a company? And I think that's also important when we think about building teams. I also think it's important when you are in front of a team is, does this team just make sense as the right people to be solving this problem in this time and space? Does it just fit, right? It just feels good, but also it makes sense, right? They've got the right skills, they've got the right backgrounds, they've got the right qualifications in some cases, and things start to line up. And so really what we're trying to do is preempt that. We're trying to say, okay, what's the problem we want to solve? And then imagine what's the individual that we would love to have to come and build something. And then who's the amazing co-founder or co-founders that we'd want to add into that mix. So yeah, some checklists underneath that, but I think the main one for us is founder problem fit.
So, Hampus, back to your checklist then, because Jonny gave us like a certain idea on his first checklist. What are if you would stack rank it, what would be the first thing you kind of check for?
For me, it is really, really, really the people. And I think that even the product and the idea and the market is like a reflection of the people. I think back to Andreas, sometimes you say yes before you meet them. I think as angel investor, I have literally had like Lisa starting a company. I'm like, I'm in. And they do like an agential chatbot for dogs. I'm like, I don't care. Lisa's fucking amazing. I'm in. Like, I don't even care what they do. It doesn't matter, right? And I think that's the vibe I think for me is that, of course, that's very different as if you're an angel investor versus you're a fund. The more you're a fund, the more you'd be like, okay, I probably have to like write something of why I invested. But at the end of the day, that is the thing. That is the thing that, I mean, we have founders that we co-created the companies with where we met them and we're like, oh, we hate your idea. And then after a conversation with them, it's like, maybe we should pivot to this. And we're like, okay, then we're in. And it's like the conversation of them changing their minds in the and stuff in the call. But I would say on the people, I think generally, I think that the thing which I actually think hard about, which are the non-obvious stuff, is actually also the responsibility of who we're investing in. And I don't mean this in like the woo-woo kind of sense, but I think I'm going to work with these people for 10 years. So one of my common questions I ask myself is, would I want my kids to do an internship here? And I feel like sometimes I don't trust these people. And then I just feel like, but then I don't want to give them money and I don't want to be like, work with them either, right? And I think that Heidi usually asks a really good question, which is also like, these are people that we elect as the leaders of tomorrow. And I think that I think those kind of emotional questions for me are really, really good because they help me gauge like deep into my subconscious and asking me stuff that I can't like chat GPT or whatever you want to call it or put on a scorecard. So I think those things, I think that sometimes we ask in the team, we ask each other like, do you want to be talked out of it or into it? And if you say I want to be talked into it, then it's just like, don't fucking do this deal. And then it's like, I really want to be talked out of this. I really want to do yet another. Like we just announced like last week, we're doing this solar installation company. And like if somebody told me like a year ago, oh, do you think we should look and like search the market for people who do like solar installations? I would be like, no, the market is so saturated. We don't want to do it. But then we met the team and we were like, I hate they're doing solar installations, but goddamn, they're good. And I think that it's like the idea almost doesn't matter if you're a good enough team. So, and I think good enough, it's always hard to tell what it means, but I think it's the classical stuff. Like you're just like high momentum, building, like, I think that we really talk internally about 3 metrics that we are differently indexing on. And this is a long answer. He said I should answer a short scanner, but this is the final thing here. I think that Heidi very much indexes on vision. For her, it's like, if they can't express a big vision, she's just not interested. And like, almost like vision as in really capital V vision. For me, it is really like, the speed of iteration. Like I love going on calls and just answering and like asking the most random crazy question because I want to figure out how agile they're in their minds. And then Yuval is very much like he loves like to discuss the product and the product to make sense. But the reason he wanted to talk to that is not that he cares about the product, but he doesn't like founders that can't explain stuff in a nonsensical way. So he just want to be like, why did you choose like to have double bolted windows? And if they say it looked cool, he would just be like, okay. But if they suddenly explain, like, listen, the drag of this is slightly lower, he would be like, oh, I love it. Like, they're so thoughtful about stuff. So those three things are things we talked about in the office. Do they have vision? Do they move fast? And like, can they explain stuff?
And maybe Hampus, a question for you, but you just announced a new deal, as you said. What was so special about that team? Because you didn't like the idea of the product per se. So what's special about the team?
I think that as Carmen sometimes says it, they're killers with a heart. Like, I just feel like, you know, like it's the kind of people that, you know, when you play, like when you're like assigned to teams, like, I don't mean Microsoft Teams, when you're like playing games, you just be like, please, please, please don't let me have Fiona in the other team because she will fucking crush me. And you know, like that feeling of like, you meet those founders and I feel like VCs say this thing, I would be honored to work for you. But I mean, sometimes you really feel that, right? You meet these founders and I'm like, I would happily work with you. If I lost my job tomorrow, I would happily work with these people doing solar installations in France. This is like, I just feel such an enjoyment. They're so great.
No, I love that. Maybe Andreas, as a follow-up question on that, what is your checklist? And maybe like when you get into a call with a funder, are you looking for reasons to say yes or looking for reasons to say no to that deal?
So I always struggled as a founder when I heard from VCs they're looking for the right founders in the right market and all this kind of stuff, because I never knew what that means. And apparently it always changes, and apparently it can always mean a no, and it's really hard to optimize for that. Like, should I change the person I am? You know, what the hell does this mean? So one thing I tried for myself is to deconstruct a little bit into mental models, like what I look for. And there's like a lot of them, and I will try to keep it a little bit brief. Number one is you can, like, it's the product company VC case. Like, you can build a very good product, you can build a very good company, you can build a very good VC case, you can build Venn diagram overlays of them, you know. You can build a great VC case with a horrible product and a horrible company. You can build a horrible company with a great product. You know, like all the overlays work. And very frequently, it's hard to, as a founder, to see from the outside what is a VC case. And I will get to this in a second. The second model I use is what I call innovation execution credentials. So basically, innovation is like, how new is this? Like from similar to stuff that exists, but slightly different, to fundamentally new. We lack the language and we don't even know if this physically works. Execution from hasn't even started yet to $5 billion in revenue and whatever. Credentials is like, why the hell are you doing a female healthcare product? To $5 trillion raised from the best investor, and his co-investor left the company to become a co-founder. You know what I mean? So like credentials is like the third one. The what I learned from myself is most VCs prefer new over better. So it's better if it's less comparable, because if I, for example, like let's say you start a web shop tomorrow in I don't know, beachwear or something, I have a lot of comparables and I don't expect you to outlier break them, even if you're way better. You know, and unless you have like something really magic sauce I don't know about. But like by default, I expect you to roughly end in that area. But if you do something different, then I don't know where it lands up. And the problem you have with most VCs is that they are absolutely horrible investors and need to finance all of their stupid ideas and all of their stupid investments with the few ones that work. Like that's the power law and the portfolio distribution everybody talks about. So what this means for the innovation execution credentials, for myself, I over-index on innovation. So ideally something is like new and not like similar but slightly different. I personally care a little bit less about credentials, which I like to say, like try to say to myself. And then I regularly see that people I respect in that space already invested as angels, for example, and then I instantly jump in a deal as well. You know what I mean? So credentials matter to some extent. And then execution is always depending on the different stages, because this is also like what a lot of people say, like how much traction should I have, you know? And that depends highly much on how much innovation or credentials you have in there. If you are the ex-founder of Google, your next company will be with zero execution and with zero innovation, and you will still raise a lot of money if you need it. You know what I mean? So I can like talk about this for an hour. And the last mental model that I like to do is: are there vectors that by default go up. So like there's a certain new tech, that tech gets improved currently rapidly. So by default, even if the company messes up a lot, they will be in a bigger market with a better technology, with better everything. And this will grow by itself and they're adjacent to that. And that's also like something that's by default good. In most cases for founders, this doesn't necessarily mean that they need to build something in that space, but it's frequently worth figuring out if there's a narrative that works, where you have like a positioning where you do the same work, the same effort, the same each day, but you actually are like slightly repositioning and therefore you're actually jumping on something that works better. You have a way to frame it in a more innovative angle. You have a way to make it sound more like a proper VC case and so on and so on. Last one on team, for me, there's always like a dominant founder. Ideally, that's the CEO. And ideally, that person represents the company as a human. So ideally, that person has like the ideal mix of what this company represents as a person. This is like, for me, the ideal one. So like if it's a very engineering heavy thing, the CEO early stage should be somebody who understands the tech, who is like really deep in all of this kind of stuff, and so on and so on.
No, I just want to react on a thing which I totally agree on. I think as well is that to what you started saying, Andreas, is if you're a founder now listening to this, there's a big risk that you can change stuff you're doing. Like you can change who you are and you're starting working on an idea. I think that so many things of Andreas said I think resonates with me that we're discussing, but I would say one thing, try to be more N of one. Like try to not make the umpteenth product of something. Because like you have to figure out so many things of the things Andreas said, like, what's the narrative, what's the market for this? Because you're not doing, yet another pet care service. And number two is high agency. Like we have founders that we've met who like we've been on a call and then they say, oh, by the way, I'm in Copenhagen like on Monday. Do you want me to drop by for lunch? They're not planning to go to Copenhagen. We all know they're not planning to go to Copenhagen. But we're like, yeah, sure, come by for lunch. That thing is like such a thing to be like, I really want this to happen instead of like just, So I think those are the two easiest parameters to change. Be more N of one with your idea and be higher agency as a person.
Jonny, a question for you. You try to match the perfect layer in terms of like idea and the founder. You actually recruit the founder for the idea. How do you do that properly?
I mean, I think I just wanted to try and also summarize because funnily enough, Hampus, while Andreas talking, I wrote N of 1,000 or N of 1. So I'm glad you picked up on that because I was literally about to say we think a lot about, is this something net new or just another one? I think just some other points that maybe for the founders on the call are like relevant and that our early stage founders struggle with is like investors is a default no, right? Like the idea is that people don't invest and don't give you capital, not that they do give you capital and you kind of talk them out of it. And I think people don't understand that your job is to kind of build conviction from no conviction and not the other way around sometimes. The other thing that I think is kind of showing up and is also true for us is that often we'll decide with emotion and then rationalize with logic, right? There will just be an intangible. You'll hear people talk about they just had magic, they just had the thing. And these are not like rational, logical things. So we can give models, we can say like, this is typically what looks good. This is typically what you should shoot for. This is typically the thing. There is just a point sometimes you're going to have to kiss a lot of frogs. I know a founder that's about to close a great Series A now. They spoke to 550 investors over this round to get that together. So there is just sometimes a thing if you have to find your person or your people. One of the things we look a lot for is what's the curve of trajectory of that individual. And what did they have to do to get there? And what are some unexpected things they did along the way? We're trying to look for predictors of those behaviors in the future. So to give you a concrete example, if you take two people that went to MIT, and one of them went to like the best private schools in the US and, came from money and kind of all these other things, had private tuition, et cetera, you could argue that they had some sort of preordained destiny to go to MIT and that they haven't necessarily over-indexed or overperformed relative to where they should be today. And then if you take someone who's like an immigrant founder, maybe they came from a super poor family, they kind of had to fight for every kind of thing they got, and they ended up at MIT, even though they're at the same place and at the same point, actually one of them has gone on a very different journey to do that. And another thing we love is weird or unexpected decisions, right? Things that for most people would just make no sense to do. I was 2 years into my PhD, I had 6 months left, but I quit because I just couldn't take it anymore and I just had to start building or something, right? Like what are the non-rational decisions that if you called your mother and you told her you were doing them, she'd probably try and talk you off the cliff. And can we see things like that? Can we see patterns that add up to that? Because typically that indicates that they're going to be a good founder in the future. I think the other thematic that I just wanted to pull on is just the importance of communication. And I think the importance of communication is also around conviction and consensus building. And conviction and consensus building is critical in the early stage because you basically have nothing. You basically have no resources, you have no money, you probably have very scant product or anything like that. You probably don't have many customers. So how you tell your story and how you bring other people with you is one of your key assets to do all the things that you're going to need to do in the future. So if you can't convince the person in front of you to give you money, then they're immediately going to say, okay, well, you're not going to be able to acquire the best talent. You're not going to be able to get the best media. You're not going to be able to get the best customers. So it is an important leading indicator. I would also say, though, that there are, of course, exceptions to that where the kind of quirkier, weirder founders, they sometimes don't come off very well. And another thing towards that is I think, like, don't mistake excellence for likability. I think that's also something that we see as some of the best founders. Some people will talk to them and be like, wow, that guy was a bit of an asshole. And other people will be like, wow, that person's amazing. They're so smart. They're so capable. So I think I would also rather always have founders that split a decision, but there is a decision. There is a feeling around them rather than just like, oh yeah, nice guy. Yeah, I hope they do well. So I think don't be afraid to kind of like be, I guess, yourself in that sense, and don't try and, I guess, mistake likability for being a good thing that would give you an indication as to where that person can execute. You need to be able to form opinions, and you need to be able to get people to either share those opinions or vehemently disagree. And then the last thing we look for when we're working with people, and I think Hampus kind of touched on this in a different way, is normally when we're starting with founders, it's their first founding experience, so there's a lot of push, right? We give a lot of resource, we give a lot of support, we give a lot of things. Typically what you see with the best founders is that the dynamic between push and pull changes the most quickly. So they're the ones that get up to speed the most quickly, and they're the ones that actually start pulling out resource from us, right? They're the ones that are like, hey, I've done this, can you help me with X, Y, and Z? And the asks are crispy and specific because they start to understand much more quickly. The founders that tend to struggle, and I think this is true in terms of agency in the long term, are the ones that are constantly looking for someone to kind of help them figure out what's next. So agency in that sense that the founders almost dragging us towards the objective, and we kind of need to keep up because they're so smart, they're executing so fast, they're figuring things out so quickly. That's also typically a very positive indicator for us when we're looking at talent.
Loved it. 500 things to pick up on, but I want to do like a hard shift into state of 25 because, really busy year that went really badly and, sometimes interestingly well. Hampus, kind of, directly to you, like you talked about the energy, we talked about a little bit like the magic event part of it all. What is the thing that changed for you in 25, right? Like what is potentially even like more proof points that you're looking for in founders nowadays?
Oh, did anything change in me in 2025? That's a really good question. I think I might have to think about this slightly longer because my spontaneous answer would be none really. I don't know if I'm an idiot, but I would say that for me, I don't think it kind of matters now because I'm kind of a believer of gravity wins. Like as the Radiohead song of like he was a plastic surgeon in the 80s, but it didn't matter because gravity always wins. I just feel like you meet amazing people and they're working with a big market, and then somebody says, "Oh, will this work under Trump?" I just feel like I don't care. Like I don't. So, but I guess I may be an idiot, Johnny. Go.
No, you're definitely not an idiot. But I think what maybe is true is, first of all, the companies that were banking on green premium, policy change, et cetera, to make the business work, I mean, they're all dead, or they're dying, or they're gone. And I do think there's been a sharpening of focus about building stuff that is climatically relevant, but also economically super interesting. That wasn't as sharp in 23, 24, 22, certainly not in 21, where you could kind of have a deck that said climate and do 5 million on 25 posts, So I think that there is a tightening of capital. I think there's a lot of funds that maybe won't raise a second or a third fund that are in market right now looking to raise. And that's also going to increase the bar for what does get funded just from a capital allocation point of view. There's just going to be less money for potentially the same amount of companies. So I do think the bar is increasing. I think it's net positive for the ecosystem because hopefully we're going to build better businesses that actually can survive and sustain. And it doesn't matter whether Trump or Biden's in the White House. It doesn't matter whether the EU has this policy or that, which is the ideal, I think. But I do think that there's stuff definitely in market that would have been easily funded 10 times over in 2021 that's taking, months to raise now, partly because of a more constricted capital stack and partly because, there's going to be some ecosystem actors. So I think if you're at the early stage, like pre-seed to A, I do think the climate of going to raise money in climate today is like radically different to what it was in 24 and 23 and 22 and 21. Arguably for the better for everyone, but it's a different beast, I think.
But I would say yes, I agree. I think like definitely, but I would say that's not 24 or 25. But I think perfect. You said, Johnny. It's really like 21, 22, and then going towards now. I think the thing I find though is that having done enormous fund amount of angel investing and fund investing, I think that also if you're the meeting booking SaaS company now, you're toast raising money now. Like it's incredibly nasty when people come out and say like we have like incredible ARR, and then the VCs say, I guess you can vibe code this book product. And they're like, vibe code it? Are you kidding me? So I think that of course we see it in climate, but I have plenty of friends and other people who are in the generic SaaS market that just says like we need triple our traction to even get meetings with VCs now. So I think it is like what you said, Johnny, as well. I think that capital has become all the tourists are gone. Like all of the tourist investors of 21, 22 are now like, I'm not investing.
I will quickly add to this actually. So we have like. So I always keep saying we have a global economic crisis right now, and people tend to disagree with me on this. I don't know. I guess depends where you live, how much you want to agree. The issue we have in this kind of moments is it's not that, like if you think of VC as like a bell curve distribution, it's not like that all of it goes down. It's by default, it actually polarizes. So you have a few topics where you can raise like random pitch deck tomorrow. AI is currently the big one. Dev tech is a good one starting now. It's like, and so on and so on. Like there's a few topics where you like, if you have something, you can easily raise a lot of money. But like everything else is like really shallow. And like, for example, like Hampus said before, like investing in pure SaaS right now is like close to impossible. Because nobody else will afterwards pick it up and like add more. Which, to get back to one thing we said before about like product company VC case, it's a good moment to start companies in that space because your competitors won't be able to raise, and the competitors that are already out there will have too much money, will have a horrible team set up, will be completely dysfunctional, and most likely never be economically viable, which is great for you in many cases, right? So just because there's less money for like a lot of models doesn't necessarily only mean that that's bad. That actually can be very good for you to some extent.
I wanna double down on this actually because sorry for calling you out, but you're the only non-climate investor in this round. So what's your perspective there? Calling you out.
When Skander invited me to this, I wasn't sure if he actually meant to text me or somebody else. So I don't necessarily invest in climate tech. I tend to think of it this way: if there's a business model behind it, and if that part of the industry is big enough, people tend to call it differently. So we no longer call it like climate tech; we call it energy or batteries or EV. Like it gets like its own thing, and so that's one. And B, the moment that the founder can found how they can scale it and how the revenue works and like how they can actually get money into this, they call it deep tech in many cases and no longer climate tech. I think right now the label climate tech is a little bit problematic for a lot of founders and investors. I think if you're doing energy, then you're an energy company right now. If you're doing anything deep techy, like you do something in that area, and ideally any modern innovation saves the planet. But like it's right now there's a certain image problem, and it's almost like I don't know who, maybe Trump, but like somebody pushed the image almost the other direction.
I think actually, I would actually say I don't think it's Trump's fault. I actually think it's the other side's fault. I actually think that, back to Jonny's point, I think that the whole movement turned the water into mercury. People built whatever boat and they put in the liquid and it floated. And people said, look, everything floats. You can just like forests can own themselves and they can create carbon credits and they will buy lake tokens and these lake tokens will start interacting with urban tokens. And everybody's like, give them 5 million, give them 5 million. And then I think that when the mercury started disappearing and the water appeared, people were like, wait a second, who's the customer? Do you make money? It's like, oh, so this like is some kind of voluntary pledges that people put in. So I think that is completely, for me, it is actually the hyper-climatized side that's messed it up. And everybody's like, we need measurement tools, like we need like new vacuum cleaners to be able to measure how many insects they suck in so that Buddhists can use them. It's just like, wait, stop, what are we doing now? It gets super, super scary when like it's just like so I think it's actually the hyper extreme everything needs to be capital C climate that made it so complicated.
Jonny, I would love to get your perspective too. Like, especially with the focus now on climate companies shouldn't call themselves climate companies anymore, but you cannot necessarily go out there and say that you're doing direct air capture oceanside.
I think you can. I think you can actually. I think it's better just being back to like I think just go all in. And to Andreas' point, nobody's doing it. We're the only company that's now direct ocean capture. Everyone else is dead. Like that might be great, whatever. I think for me, it's the same pitch as I have whenever people saying they're an AI company. I would say there are like 3% that actually are AI companies. But then 97% are people who use AI. And then I will start pitching like my software company to everybody. Like we're doing a software company. We use algorithms. Like we have lots of code internally. People are like, what do you do? Oh, we're a software company. People are like, this is not 1995. Like, what do you do? So it's the same thing with climate, right? Climate is not, like, it doesn't define anything. Unless you are a capture carbon company, because that's, of course, very clear then.
I mean, yeah, I think climate is definitely a theme, right, rather than a vertical. And I think to Andreas's point and Hampus as well a bit, that underneath climate there are many topics that really matter: energy, agriculture, materials, a bunch of other stuff, logistics, adaptation, whatever you want to call it. I think also, Hampus, your point about like climate tech ruining itself in a way is definitely true. But I also think that was driven by some naivety in this influx of capital and this influx of generalists, right? It was like, if it looks like a climate company, you know, we spent the last 20 years investing in B2B SaaS productivity tools, and now we're going to start funding like, you know, deep tech in climate because climate's cool. And it was just a car crash. But ironically, it's exactly the same thing that happened kind of with Clean Tech One, right? It's people throw a ton of money at stuff that didn't make like any sense economically, and then they're like, oh my god, VC doesn't work for climate. It's like, well, no, just like you funded a bunch of crap and it wasn't a good business, and it would never have been a good business, whether it was a climate business, an energy business, or whatever business. It was just nonsense. I also think that your point on the AI thing is super on point. Like, I don't remember, you know, all this talk about like crypto is dead and, you know, NFTs are dead and B2B productivity SaaS is dead. Like, I don't know why, but it feels like people love to kind of dunk on climate specifically as like a niche, and be like, you know, are you stupid hippies trying to do like VC stuff with climate? This is never going to work. Whereas I think that, yeah, there's a lot of companies out there that are raising substantial amounts of capital that are ChatGPT wrapper, and that's basically the tech, right? And is that an AI company, or is that like, you know, just a wrapper? So I think you're going to have the same backlash in some of the AI space. It's just that, you know, this market in ventures is traditionally dominated by software and has been for, you know, decades. That's where people have made most of the money. And so there's always this indexing back to anything that looks or feels like software. And so, yeah, it's also why everyone's so excited about AI, is because now suddenly, you know, we juiced B2B SaaS till it was dead and we had 15-minute groceries. And there's like, okay, what else do we make faster or better or cheaper? Crap, there isn't anything. What about this climate stuff? Oh, wait, we have no skill set or expertise or understanding of the space. Crap. Oh, thank God somebody is inventing AI. Let's invest a ton of money to that. So, yeah, I don't think it matters what we call it. I think the key is that thematically it's directionally aligned to companies that are trying to do something where if they are economically successful, the planet becomes a better place. And I think that's the fundamental point, is if they're economically successful, if they're successful in a capitalistic model where they can make money, they can acquire customers, and they can make margin at the end of the day. Hopefully that technology will then win, and hopefully that technology is a green one, and then hopefully we can keep living, you on this planet. And I think that's kind of like the simplest narrative we can have.
To the three of you, and whoever wants to pick it up first, go for it. We have quite a few funders, early stage funders right now in the audience. They are looking to raise money. What's the best way to get on your radar? Like, what's the fastest way and most efficient way to get on your radar?
Email me.
Love it.
With what?
With what? Just like saying this is what we're thinking about doing or something. I think it's also not making it hard. I think it was also Andreas who said it. It's like, if you make it really hard for the receiver, like people say, can you call me in? Like, I'd love to talk to you for 20 minutes. It's like, do you understand how my day looks? No, it doesn't work that way. But if they say, I have 4 really ugly slides, I have a really crazy idea. I left my PhD last year. I had 6 weeks left. And this is within transcranial robotics. I would just be like, I have to open this deck. I'll be open the deck and be like, I have no idea what this is going to happen with. So I think just like short and sweet, just like, here's some info, read it. And I think that just like, and then not being super transactional. I would be fine with like interacting with that person over a couple of weeks or something, and then just figure it out. That's the best for me.
I will say the same as Hampus, but I don't believe it's true in my case. I get like way too much inbound, and I'm doing this alone. My actual recommendation to most founders, which is more actionable, is don't pitch startup investors. Like I'm talking now specifically first round, like very specifically first round. Let's assume you're having something moderately new and you have moderate execution. One thing you can easily do is push credentials by getting people from the industry who have specifically to what you know, like expertise, brand, credentials, to get them to commit. And what I usually recommend is deconstruct what you are doing into like multiple like buckets, and then try to find the best founder in each of these buckets, or like founders you respect in these buckets. Get feedback from them, get network from them, potentially get like perfect case would be like soft commit for an angel investment from them, and then get introductions from them. Because if, for example, let's say you do an energy startup and it comes through like a founder I highly respect in energy, that's a completely different angle. But more importantly, that person possibly doesn't get like all day like crazy ideas in their inbox, and is a little bit more receptive and works in the same industry or like same bucket, whatever the buckets now are, and actually has something meaningful to say about it. So even if they don't invest, it's a useful meeting. Whereas with most investors, you spend 20 minutes and the associate will fill out their CRM, and then afterward, thank you, don't call us, we call you. So my main recommendation would actually be don't pitch investors, but pitch industry experts, and be very broad what industry means in your case, as long as this person is like an actionable for you.
I love that tip, Andreas. I think that's awesome. Just to cap it out, I mean, if you need capital and you already have a company idea, go and speak to Andreas or Hampus, not us, because you're already too late for us. And yeah, I mean, I think it is horses for courses. I mean, Hampus, I don't know how you do your emails, but it is true that you do all your emails all the time. I don't know how you manage it, but I'm more in Andreas's camp where inbox is a complete nightmare. And so I think, yeah, referrals are super powerful. I think Andreas's advice is great. And I think, again, to loop back to a point we talked about earlier, is it sounds a bit tough maybe to be like, oh, how do I get connected to someone that might invest in my company? But again, if you can't figure that out, like if you can't hack your way through that problematic to get a referral to someone that invests, it's not a fantastic sign that you're going to be able to hack your way out of the many, many, many other much bigger and harder problems that you're going to need to solve over the next 10 years. So I think if you can use a tip like Andreas's or similar to network your way in, I think it's always going to be the best way.
And I think there's a cheat thing which I would prefer not to say out loud, but I will now because in honesty, I think you could, if you look at Andreas, Johnny's, or mine, or any VC's portfolio, find the founders that are not the energy experts. They're just in your city, and you go and take a coffee with them. If you vibe together, that founder will say, I'm happy to meet you again, I like this. And then they will ping us. They will say, I met this super cool founder, I really like them. That WhatsApp, Signal, Telegram, SMS, email, we will be like, Lisa, who did you meet? Just introduce me to right away. Like, I want to talk to them right away. And it's like, when any of our founders say to us that I met an interesting person, we like send an invite to the person with like the full allotted time we do, which we typically do like for the second or third call for a normal founder. We just be like, I want to talk to you. Lisa recommends you. I don't know what you do. I want to talk to you. So I think that's the cheat. But the reason I don't want to say it out loud is please don't pester our founders.
Okay, I think I like this one for Andreas. What is a good return for you? How do you think about it in general when you think about investing in a company and as a fund as well?
I invest so early that this is really hard to say. Like I can tell you, like on my portfolio construction, it's basically a fund returner, and that's like the amount of companies I invest in. If it's always the same check size, in my case, like 40, 45 companies. So like a 45x is like a goal in a return minimum, and that's like where it's starting. But the reality is like you invest, like I frequently invest so early that this doesn't really matter that much. What I usually look for in that stage is more like all the aspects we discussed before, but also like, are they good in creating mind share? Like, do I think that they will actually be unique enough on the market to like survive the first phase of getting a little bit bigger, so that I can actually help them with getting more money in the system, and so on and so on. So like at that stage, my main goal is actually, can they get enough velocity, momentum, acceleration, whatever you can call it, that I can help them get more money into the system, like another round later on, or like in a perfect universe, it would be customers, but like, let's be realistic, it will be at least one more round. And for that, it's mostly momentum. So yeah, like return is so far away at that point, from my point of view.
Follow-up question here. So I think Jonny might be a really good candidate for that. Like, what is a good investor?
I mean, I think investors. So every investor provides capital. So I know that money is the main thing that you need, and that's what you're desperate to have is money, because that's going to like keep you going, get you to the next phase. But I think you have to be aware that that is the minimum that you can ask from an investor, and not the maximum, as difficult as that sounds. So I think you also need to understand that depending on the stage that you're raising for, and depending on the involvement of that investor, do they take seats, do they not, etc. You need to be able to work with them as well. So, you know, Hampus was talking about the human fit, but there also needs to be the human fit on the other side, right? Is this somebody you can call up on the phone, send a WhatsApp, ask something, and have a constructive dialogue? Is this someone who has also thought deeply about what you're trying to do? I think is very valuable. So the value add of an investor who is educated on what you're doing, or has analogies or parallels that they can draw on from previous experiences that are relevant for you, I think is super, super additive for founders. And then one of the other things that I think great investors do is help you as you need to connect with other people across the capital stack, across media and events can also be a massive thing. Can they help promote you? Can they help make you the kind of in vogue thing? I think one of the subtexts also, which we talked, I guess, around is because there is so much like, what is it, signal to noise or noise to signal, whichever way around it is in our world. VCs do like index on the hot company or the company they've heard about a lot, right? There is also like recognition value in being very known in certain sectors and in certain industries as well. So can they also help make you a bit more famous? Can they also help make you very well known in the right circles, in the right ecosystems? And then the other thing that I would love our founders to always try to do is ref call the VCs, right? So the VCs are going to do a ton of ref calls on you. Can you go and do ref calls, not just on the ref calls they give you, but can you also maybe track down a company they invest in that didn't work? Because if you can find a company that they invested in that didn't work, and you can figure out like what were they like as that ship was like gently or violently maybe descending into the bottom of the ocean, I think that's also a good litmus test of kind of the character of that person. They're not going to be able to help save that in every context, but there is an element there of like, how do they help you when your back's against the wall, and not just how they help you when you're winning. Because it's easy to help founders when they're winning, right? It's easy to celebrate them. It's easy to like promote them. It's easy to introduce them to people. But if you have a company that's like really struggling in the portfolio, what are they going to do to kind of help that company get to the next step? What are they going to do to help that founder get through? Or is it just a case of, okay, that person's like persona non grata now, and let's not worry about them and just hope they kind of disappear soon. So I think try to learn from their failures as well as their successes.
I did this recently with a founder of mine who had like an offer by a leader that I absolutely didn't know. And we looked up on Crunchbase companies that were no longer on their website. But like asked those. And turned out there was good feedback. So like it was like just house
That's
cleaning,
good.
I guess, but
Yeah.
I felt like a genius, like, hey, now we get all the gossip, nothing, only good news.
That's good.
I'm actually in shock with how people are not doing this, like how easy it is. Like you can make it so easy. You go to their webpage, you look at their current portfolio company, even if you want that, ping the founders on LinkedIn. I mean, I would say like my feeling is that like 70-80% of the founders respond to you. And I think that I also would say if the founders are not responding to you, there is definitely a signal in that. Like if you ping them and say, hey, we're in conversation with your previous lead, I would love to kind of ask you. If they ghost you, you kind of know that they don't want to talk to you. They feel awkward about it. So I think it's so easy. And of course, that Andreas Crunchbake's hack is 10x. But I'm so surprised how people are not reaching out to the current portfolio and just asking them a normal question.
I mean, I think the main problem that most founders have is standing out. And like, we can ask, like, for me, it's always like a luxury to DD the investor. Like I tell everybody to do that, great. But it's almost like it's so hard to stand out enough that you can choose your investors. You know what I mean? So my feedback is the same as before, like narrative so that your innovation actually sounds unique, execution so you have to hype publicly, and credentials that you get like the right introductions and the right people are involved. That's like the only ways that's the ways that I know that work really well.
Plus one on building optionality. I think that's a great point, Andreas. Right? Like if you only have one term sheet from one investor, and it's take the money or die, then you can do all the reference calls you want. But at some point, like it's take the money or die. So yeah, building optionality is key.
So maybe Andreas and Hampus a bit more relevant, but I guess Jonny as well, because you will have to help your companies fundraise as well. When you do that first check, how much do you think about that seed and Series A later, as opposed to just like investing right now and kind of believing in the company?
I think Johnny probably thinks about this more than we do. I
Honestly, I think this is literally like a lot of what we think about. I mean, yeah, look, we launch every company with 250K at the moment. That's clearly not enough to get them, all the way to where they need to be. So I think we do pay a lot of attention to trying to make sure that, first of all, people are getting excited about things before we've launched them. So that comes back to the marketing. That's one of the roles we play, is we're also at the events, we're also in the right ecosystems, and we're kind of also like the hype men for our own portfolio. And trying to make sure that people are getting ready and excited about the next company that's coming up or the next raise that's coming up, giving them tidbits, keeping them front of mind. So I think that's a really important role that we think about trying to play. And then, yeah, I mean, it is critical, unfortunately, that you try to build and invest in things that at least at minimum, a few other people would be willing to write a check into, in theory, as long as they like the company. Because if not, you're just basically launching a plane off a cliff with like no gas, and it's just going to crash and die. So I think we do try to get the pulse of what are people excited about at any given time. What are people looking for? What are they not seeing maybe in the market right now as well? And try to make sure that we're building stuff, hopefully that's a bit timing aligned. We can't ever do that perfectly, but at least know that there's some people we could point to who's like, this could be an exciting company for these people, or this could be an exciting potential opportunity for them. And again, I know also seed and Series A investors that think about this, that in the round structure, they're already thinking about, okay, who's going to lead this after us? Because it's all well and good if you believe in something and if you think it's great, but if upstream, downstream, whichever way you want to go, there's not the capital on the follow-on, then that's complicated. So I do think, unfortunately, it is part of a decision factor. It's certainly not the only decision factor, but it's part of it. We tend to take a very high conviction approach and invest in some stuff that we're not exactly sure who's going to fund it next, and hope we figure that out by the time, because we've just built so much conviction on the idea that we think it should exist. But ideally, we have an idea at least of minimum, 50 people that we think could at least be interested to have a look at this. And then it's, we're in the game that we've been talking about for the last hour, basically, of, do they like them? Does it work? Does it fit?
I could just say, to contrast it, we have a scorecard that all of the three partners write quickly about our company. We have one line which is called VC fit. And I think that maybe 1/10 of the company has a comment written on that when we invest. Because I think we just tend to be like, we love them, they're great people, it's going to work out. I think that it's I think that it's one of the factors we speak the least about, honestly. That we're just Because if it's a great company and great people, they will figure it out. If it's not a great company and great people, they won't figure it out. Like I find it super hard to predict what people would be excited about and how quickly this company can traction. I think the conversation we're having though is the next round a narrative round? Is it a metric round? Is it like a logo round? That's a conversation we're having quite a lot. That is like something because that is like that tells us also later when we're helping the company, we're telling the founders, you don't have to care about whether they're paying you. It doesn't matter. Get their logo. That's the only thing people are going to be worried about, that you can't get big logos. And like if they pay you $10 for a pilot is fine. Or we say nothing matters unless you get up to a million ARR. Like nobody cares how you get the money, but a million ARR is what you're gonna need for this kind of company. And I think so. So we're much more in the category camping than like who's gonna do it. I have no idea.
Keep in mind that Johnny's time horizon, like for the audience, like Johnny's time horizon is like a few months, let's say up to 6 months, and Hampus invests enough that the company can be around 2 years with like working like a company and 4 years working like insane people in a shed, you know.
Yeah, we have one of those together. We have insane people working in a shed together. Yes.
Actually true. So like it depends on the horizon. Like if you can actually finance with your round somebody for 2 years, of course, it's not as important what the next investor will like or not like. If you are launching the company like Johnny, you spawn the company and you already have like this is a Hampus deal. Like I see it, you know. But yeah.
Alrighty, let's talk a little bit about herd mentality then. Most good rounds I've seen were also engineered, where you had like a little bit of a bidding war between investors going on. I think I'm kind of like looking for like an open, honest answer. So like, how influenced are you by others who are already committed to the round? What are you checking for there?
Tabletop is simple. It's like an answer usually for us. We only lead. We hate when other people like invite us to rounds. We get super pissed off. So like we love when like Andreas invites us to deal, but like if another VC would have won more than 50% round says, "Do you want to do 250K?" We're just super. It's just like super irritating.
So for context, I do like 100 to 400K, and if the company raises like 2 million, obviously like somebody like Hampus would lead that round, and I say like, hey, I like it, I'm committed. Do you guys want to like actually do properly the lead for this round? And that would be that kind of setup that he's talking about. I will quickly answer this. So like if you see these mega rounds, like quick disclaimer, very frequently it's actually 1 or 2 rounds combined and then just a press release. You know, that's like not one thing you have to realize. Number 2 is that we talked about polarization. Everybody wants to invest in the companies that all the other VCs already know, because that makes you look good as a VC. So if you like imagine you work for like a Series A VC fund, ideally you want to invest in the logos that all the people in your industry know, makes you look good in front of your boss and everything. Or differently put, like to make it economically sound, you want to invest in the winners, because given, like we asked before, like what is a good return? Like for me, there's pretty much like only 2 returns. Either it's like insane or nothing, just to make my fund work, you know what I mean? And that's how a lot of VC actually works. Like it's if you pay double or 3 times to invest in a number 1 company in a space, it doesn't matter. Like not at that stage where you invest at, you know, it doesn't matter. But if you invest 30%, like you save, let's say 50% on the deal, and you invest in a number 25 in that industry, you know, very likely you won't get any return and the company will fizzle out. So that's the reason why, like once you have something looks like a winner, everybody wants to jump in. Somebody in the chat mentioned before India. India is an extreme example. Like it's really, really hard to get a pre-seed. And then once you have a pre-seed, you almost get the seed for free, because then all of a sudden you like have been chosen, you know. And it's similar in all markets. Like it's really, really hard frequently to get like the change the if to a when, and like you have like your first investment, and then you are actually a company and you're actually seeing and like everything is happening, and then surprisingly, all of a sudden, the other stuff comes like much more into place, because you're like perceived as one of these companies that can be winning. Or differently put, if a tier 1 fund invests in you, every other tier 1 fund will send you, or will also want to talk to you, and every tier 2 fund will send you a term sheet without you even asking, you know. And tier 3 fund will send you term sheet without you even knowing about their name, and just like random email, here's a term sheet. And they have to do this so that they can say that they also competed for the offer to their bosses. It's really weird.
Yeah, that's a weird dynamics of VC. But one last question, and we'll keep it there. I think a lot of funders get rejected a lot by VCs. We said it earlier. How often do you say it's too early, as opposed to it's too weird? It's like, as opposed to saying the truth, or like too risky when you mean actually like too early. So like, are you actually honest when you say
if somebody says you should come back with more traction, it means that your innovation or your credentials aren't strong enough. Like, of course, if you have 50 million ARR in your first 3 months, of course, it doesn't fucking matter what you do. It doesn't matter who you are. People will invest, But if it's like in the in between zones, like there is no magic number apart of like insane execution, or you have like innovation and credentials. And that early stage traction can be whatever you want it to be, but they have to believe it. But in practice, it's way easier to change the narrative on innovation or tune the product and get more credentials in. And that's way easier than like it's too early discussions.
I just want to add on Andreas's point, because I think it's a great point. We talk a lot about your job is to turn opinions into facts. So, I don't think that there's a market for this. Okay, I have 50 million revenue. Clearly there's a market for that. So everyone's going to have opinions, and the earlier stage you are, the more that the basis of their decision is going to be based just on their opinion, what they think about something, whether they think it's going to work, whether they feel it's going to work, whether they sense it's going to work. And part of your job as a founder, I think, is to figure out, how do I make as many of those opinions concrete facts that I can demonstrate and I can reason through and I can just show you. Like, it's just a fact. Because the more you can do that, the less you are leaving things to people's subjective opinions, and the less out of control you're going to be, that their opinion is not the opinion you want them to have, and therefore they pass on the deal. So this idea of turning opinions into facts, I think, is something people should try to think about at different stages of your development as well. What's your proof for each of these things? And at different levels, that's going to be different. At the earlier stages, it's more going to be about you, your creds, as Andreas said, about who you are, But as you move through, people are going to want to see proof points, and not just, hypotheses.
I think that it's also about, well, I'll start by answering your question. I think for us, like we answer every single one that emails us, like at Payable.dot, and I send a lot of answers. And I think we are completely honest, which is the answer is, we didn't just find energy and love for what you're doing. And like, we write this completely honest email. I think if you go back 2.5 years ago, we actually, with every single founder that we had like a deeper, so I write a serious email to every single founder like I've met. If I've met them on video, I actually really comment. But if I don't, I send the we don't have energy enough email. And the reason is that the worst thing that happened 2 years ago is I looked at a deck, I wrote like my opinions, as Jonny said, and the person was so attacked and got back to me with explaining all these things. And I got a super aggressive email back, and I like responded, and now we have an argument, which is not going to help that person at all. And of course not me either. So I think nowadays, the truth is, we look at the deck, we just go, I don't know. So then we respond, we just didn't get the energy. And that's completely honest. Like, we're not talking about traction or team, we just didn't get the vibes, and that is the truth. And I think that's the part of it. So like, as you said also, Hugo, I think the headache is, we look at a lot of companies. So like, you look at a company, a couple of companies, and then there's one company you feel like, wait a second. Just before this call, somebody WhatsApped me with a company. I forwarded to one of my founders and said, crazy good or crazy bad? And he said, put me in contact right away. And I was like, he did it in, I think, 10, 12 seconds, which means he probably saw 2 to 3 slides of the deck before he said, put me in contact. I don't know what the company does. But the thing is, that's like usually how it is. People are like, whoa, this vibes me. I definitely want to talk to them, right? Versus like it's to Andreas, like sticking out and not being like one of those is like, okay, carbon accounting for dog poo. Okay, I guess we should look at this. I don't have the energy. Does somebody in the team have energy? No. Okay. And then you don't want to answer the founder. We think dog poo is a small market. You're just going to answer, like for us at Pivot, we just answer, we didn't have the energy. I'm really sorry. I think it must be way worse for you, Jonny. Because like you will have people that you say like shit about.
We try not to say shit about them, but yeah, we
It must be
we have to basically just be like, yeah, we just don't see it.
we just don't like you.
Yeah, we just didn't float our boat. I mean, yeah, I think it's like rejections are complicated. I think I've seen everything from the VC end of nonsense, too early, come back and I think it's fine. Like I think basically it just means that they don't want to invest. And I think the problem is that there isn't really a rational reason at the early stage, right? We've talked about this. There isn't something necessarily, because it's all just opinions. It's subjective. When you start to get to Series B plus, so you can start to look at the business model and the financial plan, and you can be like, objectively, we think that your capex is too high for this market or whatever, like some logical reason. But at that stage, it's just going to be, do they agree with your view of the world? Do they think this company should exist? And do they believe you're going to be the people that should create it? And anything else after that is a rationalization of something. They're just trying to give you an idea of something. And sometimes they'll point to things, but that doesn't necessarily mean that was the thing, which I guess is the rub.
I think the advice I would give, though, if you're a founder listening, I think the thing is, back to the narrative part, is like, sometimes I think people are really not doing themselves a service when they say, we worked on this problem for 9 years, like da da da, and they tell this long, like, arc. That can serve in your advantage if you're doing quantum computing, and you probably need to have thought 9 years about this. But if you're doing something which feels like you vibe coded this together, it's super negative. That like, so I think sometimes you realize, yeah, sure, we worked on 9 years on this, but it's the last 3 months we actually had the big breakthrough. And talk about the breakthrough. Talked about like this been on our mind for the last 9 years, but then like, essentially 5 months ago, we just like rolled up our sleeves and said, let's go do it. And in 2 months, like the product started working, and now we have 12 customers, and like we're essentially have onboarding calls all the time. Then the VC will be like, what the heck? And I think that comes down to the VC lingo word, momentum. So like if you can show momentum, people are just leaning in. It's like something's happening with this company, right? And that momentum can be, as Andreas said, about angel investors. It can be like people in the industry. It can be like your metrics. It can be like you're hiring super interesting people. It could be like customer logos. It could be like you're just busy. It can be other VC calls back to like the staged rounds. It is the fact that you just feel like this company is like something's happening here.
Also keep in mind you can engineer momentum. So for example, like a common problem is I see founders want to raising like 3-5 million. And I know that's maybe possible, but it will take them forever to make the round actually hot. Likely it's easier for them to get like 500-600 from good angels and just like get that actually going, become a real thing. And then all of a sudden everybody's like, wait a minute, where did this come from? And then when you actually are like raising your round, like not like little touch points with a lot of people over time, but like very condensed, like, hey, we just found this out. I got like a lot of inbound by a lot of VCs. I decided to make a proper round of this. We're feeling out if the market is currently interesting or not for this, but we don't have much time because we got like so much customer inbound. So we want to like compress this. Like, can we have a talk in the next 2 weeks? Figure out if this is in general principle interesting for you at this stage, and if not, let's move on. And like compress and get like make the like it's almost like you compress it, and because you compress, a lot of hot air becomes like hot. Like you actually create the heat in the round. There's like a few techniques you can do as a founder to do that, and like a lot of that is like narrative structuring, how you talk about the thing, like have inflection moments that you like push a little bit bigger than they are, disappear from fundraising. A lot of people are just like permanent, like on the market, and like I feel like everybody has talked to you. Like, how big is the chance that I pick something that everybody else rejected? Classic one is here, like you are still raising 2 months after YC demo day. Like, just please stop raising, disappear for 6 months, and then be like, holy shit, we have like this really big moment now, and then try again, and so on and so on. Like, there's a few things, and like I think a lot of founders don't intentionally think about whatever the right framing for this is, like structuring their momentum or engineering their momentum.
I agree. The other thing I would say to that is actually seek and know. And what I mean by that is like you want to Johnny's point, email like 500 VCs, hopefully not 500, but a lot of VCs, because you kind of want 50% to just say no and try to get them to say no quickly. So like one of our founders did a round, it was 1 or 2 years ago, I don't remember now. And we're starting building the CRM and talking about like a spreadsheet, of course, we're just like pitching names on it. And I told him, I would love to get 50 no's the first 2 weeks. And he was like, 50? No, what are you talking about? And I said, no, that's great. And then you have 50 left, and then 30 will just ghost you. Too bad. 20 will give you weird reasons, and those 20, like, they're the ones we're working with, right? And he was like, this is the worst. Like, should I seek no? And it's like, yes, just seek no. And it's like, so push VCs to just say, no, we don't want to do it, right? So, like, I love, like, when I did it, like, it's so close to enterprise sales. When I used to do enterprise sales, and I do it still today, like, when I pester Andreas about doing events, and John about doing events, and you guys, like, I ping you, and then when you don't respond, I reply to my own email, and I say, like, hey, sorry, did you get this? And if you don't get it, I respond a third time, and I say, hey, Andreas, I'm sorry, I didn't mean to, like, just
He's
ignore this
talking
email
about me
completely.
specifically here.
And then
I
write,
feel it. I just feel it.
but then I write
I'm
in
checking my emails now.
like in the third email, I literally write like it's fine, no worries, like I'll take this as a no. And the reason I'm doing that is like I'm putting no in your mouth, so that the VC or whoever I'm seeking can just say, yeah, I'm sorry, like sorry, yes, you're right, like we don't have time for it. Now you can just change no to your CRM. That's great.
As a founder, for me, fundraising completely changed, because I always thought of fundraising like homework. Like I need to do these things, bring these things, then have the next meeting, then get new homework, and then at some point they give me investment. And a friend of mine was pitching his startup at a VC in London, and they asked him if he can come 2 days later to a partner meeting. And he came to the partner meeting. There was like 15 people, like big group. He pitched everything. All of a sudden, 2 people got up, went outside. Everybody else was awkward and like did random small talk and like basically pitch, please pause, you know. The 2 went outside, they came back and they were like, we want to do it. This is the terms, like, let's do this. And the founder was like, I need to talk to my team and like get their, like what they think about it. And like, thanks for your offer, blah, blah, blah. Flew back home. And arrived in the evening. Next morning, he gets a call like, so 2 of our people are coming today to your office, like different city in Europe, you know, and 1 partner, 1 associate, and they prepared a pitch deck overnight. Why this fund is the one fund that they should take and so on and so on. They didn't have other term sheets or anything waiting. It wasn't like a hot round. It was like, we want this deal, you know. And if a VC wants to move fast, they will move faster than you. You know what I mean?
Yes, they can.
And if they don't move fast, they don't want the deal. And that's like such a like that broke me, like, because I was also fundraising at that time. Like it literally, like I was like, what the fuck, you know? And that changed for me how I think about fundraising, because like if VCs don't jump on it, it means no. And that means for you as a founder, like maybe this path you're currently doing is going nowhere and you should deconstruct. And deconstructing can mean smaller check sizes, work with angels, get somehow other traction pointers in it, get a redemption,
More VCs
whatever.
in the funnel.
But deconstruct it, you know what I mean? More VCs in the funnel, whatever, put more pressure in, have a different narrative, do Twitter stunts, do a LinkedIn stunts, doesn't matter, but something, you know? Because VCs, if they want it, will move fast as
They
hell.
will move fast, yeah. One of my previous old partners in the previous fund, he flew to Iceland on Christmas Day to close a round on the 24th, and which is like, you know, Christmas Day both in both of countries. And it's clear, VCs can move fast. I think one of our founders did a wonderful thing that I think more founders did, which is like, he had a CRM, he went on the call. So he went on this call in the morning, talked to the VC, and like, you know, these are all of the ones that have filtered 1 step out. And if he had a call, he took quick notes on the call, and in the evening, he sent a loom with like, he opened his own Notion. He went through the Notion and he said, this is amazing, super great to talk to you. You were very worried about this, and like clicked in, like, here you can see the Notion. And then he sent an email with like, hey Greta, here's the Notion explaining, like, you know, from our call, thank you very much. And here's the Notion sharing. And he just cloned the Notion. Like, it was insane. Like, if you think about manufactured urgency, every single VC is like, this person, it took 12 days to close the round. And it was like insane, because like people were so stressed because they realized that he does this to everybody. And if we're impressed, everyone else is impressed. So I think that's the thing to do, is like, don't sit and wait for the VC. Like, tell them, so that, as Johnny said, try to make their opinions to facts. But if they don't jump on it, I would also say to Andreas' points, they're not going to do it.
I'm always amazed how often founders don't do their homework, which like I think goes in general for all of us. Like, you know, just sending a simple thank you email, which I now like, you know, put on my to-do list to do it after this call, because you all gave awesome answers. But like, you know, just, you know, it's a relationship, and relationships go both ways, right? And you all like hit that point home multiple times, that it's like, it's about the vibe and the energy that you feel with the founder and the founding team and everything, but it's also obviously about how they treat this relationship.
Yeah, I would say this is actually one of the few things in venture that I brought on to my kids. I have 3 kids, is the fact that every time I meet a founder and we have a call, we hang up and the person sends an email or WhatsApp or whatever within a couple of hours and just says, thanks for the call, it was great with your opinions. Whatever. Even if I said no on the call, it's some of the things I really tell my kid. If anybody does anything nice to you, please just message them the same day and said, talk this morning, thank you a lot. Because like it's crazy what the effect is. Like you really feel like, oh shit, the person reached back. And I think the reason people don't do it is because like if you get to talk with your idol, like you don't feel like you want to bother messaging them. And I can say I was at an event last year, and on this event I happened to be in the same toilet line as Trevor Noah. And I didn't know who Trevor Noah was, just kind of embarrassing. But somebody introduced us, and I started talking. I realized who Trevor Noah was, and we had a great time. And then he gave me my email address, and I was 100% sure this is not Trevor Noah's email address. Obviously, this is like his like get rid of people email address. So then I emailed him when I was going to the airport later, and I said it was great to chat to you in the toilet line. I'm that guy. That guy. He responded within 5 minutes, and he didn't respond because I matter to him at all. He responded because he's a fucking amazing person, which means that he responds to emails. He was like, yeah, great, got it, thank you very much, bye. He didn't say like let's meet up. He just said thanks for the compliment, right? And I think that's the thing. It's like build those relationships. It's not that hard. I felt
So-
I didn't want to bother Trevor Noah, but I realized that he's going to get a nice email from me.
So the takeaway here is lead gen in the toilet line.
Exactly.
Okay.
He didn't invest.
Jumped like again, like what I learned from Hampus today is if I want to meet him, I will need to be in Copenhagen tomorrow, and I will randomly drop by for lunch.
We invested in one founder that we were skeptical to, who said, I can literally be in your office this week, any day. And we were like, you're in London. And he said, yeah, sure. I was like, what about Thursday? And we ended up meeting him, and we had big long conversations. And actually, the funny thing is, we started by declining it. He said, I would just like to deconstruct this and that. And he was super interesting in intelligence. So we had a great conversation to try to help him. And in that conversation, we started realizing how much we started liking the business. And that's of course unique. I think that is like it's very rare that we want to meet people like that. But it just happened. Like we just felt lunch, whatever. Like if you're here, it doesn't matter, right? I genuinely had a question because I think that when you're trying to pitch Andreas and me, like I think it's so different because I think that we're funds, like you kind of understand our dynamics, and like you're obviously represented by a deck or whatever. If you pitch you, like how does one get into Marble? Completely honestly, like what's the best way if I'm right now sitting somewhere and thinking I really want to be a Marble founder? How do I get on your radar? How do I get in? Because it feels much harder than doing it with us.
I mean, we do read every application. So I guess similar to your emails, we have a bunch of different opportunities that we're already excited about. So one of the things that's great is if you are aligned with something we already want to build. So on our careers page, you'll see every area that we want to build a company against, right? So these will be different problems that we're excited about, that we think are exciting. And we're just looking for that perfect person. So if you align with one of those areas and you apply to those areas, you will get interviewed, you will hear from us, and we'll take you through that process. If you are just a super smart person who really wants to build something in climate, you can still apply, but I would also encourage you more to try and network through with us, right? So we can kind of get to know you in a similar fashion to what we talked about from a venture point of view. And the other thing is we might also find you. So if you have the right setup and you're speaking to us against a certain set of criteria that we're looking for actively, we do a lot of outbound, looking at labs, looking at LinkedIn, looking at these kind of sources to try and find that kind of diamond in the rough, let's say. So I'd also encourage you to have a good online presence, right? And I think we haven't really talked about personal brand. I don't want to start bringing that up now because I have to go. But that is the thing, right? Is even if you're a scientist in the lab, like make a LinkedIn, for God's sake. Like make a LinkedIn profile and like put stuff on it. It just helps. Like publish your stuff in the right places. Be active if you're interested in it on X. Like give people opportunities to come and also find you and tap you on the shoulder. Because if you're not present and you're just really, really underground or really, really hard to find, that can also just make it harder for everyone to find you. So we do read everything. You can apply. If you know someone that has been through the program, similar to what these guys have said about companies they invest in, that's also a big plus for us. And also make sure you have your right presence sorted, and then maybe we'll find you as well. That'd be my top tips.
I would so recommend everybody to actually end up going and doing a startup, whatever way they're doing, because I think that if you apply to Marble, if you get to the interview, just being in the interview, I think you're going to grow. If you build a startup, you get investment from any of us or anyone else, and you do that for 1 or 2 years, I think people just learn and grow so much. So I think that I would really recommend so many more people to just go and try, because I think that it's such an extremely like growth experience to have to do it.
Yeah. And just to add to that, one thing we talk a lot about to founders that are afraid of failing, because sometimes they're just not from this kind of world, but they're amazing scientists or academics or so on. We're trying to nudge them into becoming a founder, for example, is people radically overestimate the cost of failure and radically underestimate the potential upside that's possible. And that's even in the case of quote unquote failure. So even when you come through even the program and you fail, or when you fail in the first 2 years, your life will be radically different in so many wonderful ways, because you'll have met so many new people. You'll have then been a founder, which is kind of like a badge that you can carry and opens up other opportunities for you. And yeah, I think the upside is uncapped and the downside typically is extremely capped, which is an unusual dynamic. And I think it therefore pays to always gamble and try and hit the upside rate. So yeah, keep building, go for it, swing for the fence.
Yeah, and maybe I'm a bit of a fanboy of Marble there, but I think it's not really failing with Marble, because like you do get the experience, you also have the support from Marble at the beginning. It's like it's much easier than just like going outside and trying to build a company on your own, where like failing could look like you never hired anyone, you never build any product. I think with Marble, you guys really help them to at least try and push that as further as they can, and then if it fails, it fails, right? So I think it's as you said, it's a lot of learnings as opposed to what it could look like if you're alone and don't deliver any, even like MVP or proof of concept, right?
Yeah, I think so. I appreciate the shout out, guys. Thank you a lot. But I don't know if this is because I said I need to leave, so now you're trying to tell me nice things about Marble, so I want to say, but yeah, keep talking to me. No, but yeah, we tried to
in this call.
Yeah, I mean, we tried to give people a soft landing, if that's the case, that's for sure.
Good. And I just want to hype our conference. We do this conference 16th, 17th of September, which is crazy. So if you want, check it out.
Best conference, highly recommend.
Best conference.
It's the strangest thing, so try to go.
And you will meet, at least Jonny and Hampus there.
I'll be there as well.
Andreas.
Oh, perfect.
Everyone.
Damn it, I need to go.
Amazing.
Andreas, anything you want to plug?
No, let's wrap up. Because I have the tendency of speaking 5-minute monologues. So I'm cool for wrap up.
Alrighty. Subscribe to Andreas on his new YouTube channel.
Oh yeah, true. Sorry. Yes, I'm doing a YouTube channel now, which my wife calls my midlife crisis. This is an example video. I throw it in the chat. Like and subscribe. I'm not one of these people.
That's right.
I'll join you there. I think I'll put it on screen, but you can subscribe to the podcast on Spotify and on YouTube. And we actually will publish the recording of today on the podcast. And Skander, maybe over to you to talk quickly about Climate Drift.
Yeah, well, you are all part of a Climate Drift production right now. Come join us for the next sessions. We've got quite a few planned. Similar vein, what are the challenges right now and how can we solve them? Everyone, thank you very much for joining. Thank you for staying overtime. Thank you for being honest and direct. And we should do this a weekly thing, monthly thing. We should get this group together and
for sure. I loved it. Thank you so much, everyone. Hampus, Andreas, Jonny. If I don't text you after what I'll say it now. Like, thank you very much for today. It was an amazing event. So thank you so much for doing it with us.
We will measure the texting afterwards, Hugo.
See ya.
Thanks so much.
Bye.
Ciao.